Hi, I'm Rainey with Finance Strategists. In this lesson, we're going to cover
investments are generally defined as transactions conducted with the intention of reselling an asset for a higher price in the future, called capital gains, or to generate income, such as rental income or dividends. The exact criteria for a transaction to be considered an investment, however, is not concrete. Especially in terms of accounting, different transactions may be constituted as investments by different people. For example, a lease transaction may be seen as an investment by some, but not by others. An investment can encapsulate any action or operation undertaken with the intention of generating some form of future income. As such, even the act of producing goods with the intention of reselling them in the future can be seen as an investment. Investments have traditionally fallen under three categories, or investment methods: debt investments, such as loans, equity investments, such as company ownership, and hybrid investments, such as convertible securities, mezzanine capital, or preferred shares. Debt-based investments can be further broken down into two subcategories: public and non-public or private investments. Public debt investments are any investments that can be purchased or traded in open debt markets, such as bonds, debentures, and credit swaps. Private debt investments are any transactions that generate an asset on the balance sheet and are not openly or easily traded in markets, such as the purchasing of another entity's accounts receivables or loan receivables, which are expected to generate some form of future income. Equity investments can also be categorized as public and non-public investments. Public equity investments are any equity-based investments that can be purchased or traded in markets, such as common stock. Trading public stocks is often the type of investment someone has in mind when discussing investments, as stocks tend to dominate news and media headlines. Private equity investments are not traded on a public market, such as venture capital or mergers and acquisitions. Private equity investments are often a high-risk, high-reward, and larger-scale investment that are not within the scope of a small investor. Hybrid investments are investment types that mix elements of both debt and equity, such as derivatives like futures and options. Let's hear from you. Why are stocks the most frequently discussed type of investment? Leave a comment below.
For more information, visit www.financestrategists.com. Finance Strategists, strategies for your future.